If you're a real estate agent, not knowing how to do your taxes is gonna cost you a lot of money. So that's what this video is about. Hello there, ladies and gentlemen. I hope you're all having a phenomenal day. If you don't know who I am, my name is Aaron. I'm a real estate agent here in the Chicagoland area, and now I'm also an investor. Going to add that to my title, my little tool belt. And I make content twice a week about being a real estate agent, an investor, and just general business information for everybody to be entertained by. So if you enjoyed, please do me the greatest favor. It helps a ton for the algorithm. Tells me you like what you see. Hit the like button. Leave a comment with your thoughts, feedback, insults, compliments, whatever, questions. Every one of those will get a reply, and of course subscribe if you're new to the channel. And finally, if you want more like hands-on content, some type of coaching, I do a $10 a month Patreon. Link is in the description. Join in. I do one weekly call a week, and you get access to me. Ask me anything you want. I'm very open. This exact video that I'm making today, I made for the Patreon 2 weeks ago in much greater detail. So there's a lot of benefits to you as a consumer. So that being said, now that the business is out the way, let's get down to business and brass tacks. Let's talk about these taxes. Now, first I want to tell you how I did things horribly wrong for years. I've been in real estate now, it's my 6th year, which means I've done taxes 5 times. And every single time tax season comes around, I'm in panic mode. I hate my life. I'm like, this is horrible. I gotta pay a bunch of money. I never really saved the money. And it's like, it's always my next commission check is going to my taxes, right? That was me for like the first 3 years. The 4th year I had a little bit saved up. And then the 5th year, fortunately, I was a bit more prepared, but still, when I got hit with that $30,000 tax bill, I didn't like myself very much. And I only got hit by that bill because I didn't meet with my accountant and do tax planning properly and structure my business in a way where I could take the best deductions and have the most, favorable terms. For 5 years, I've been operating as a 1099 independent contractor, as we all are. Right? I never really cared about accounting. I just said, look, I'm just gonna focus on my business, make as much money as I can, right? But between year 4 and year 5, my business grew exponentially. I believe I went from it was either 57 to 67,000 a year to $145,000 a year net, right? So it's a problem. It's a huge gap. And I didn't really structure my business because I wasn't really prepared for that growth. So here's what ended up happening. When your tax is a 1099, you pay, and this is federal, so this is across every state, even Hawaii and Alaska. You pay 15.3% flat tax on your adjusted gross income, which is not good. Which means for example, for me, my adjusted gross was I think 92 after every single one of my deductions. When I say net income, I'm talking about after my commission splits. Adjusted gross income is after I take out all my deductions as a personal business owner. So I think my adjusted was like 92 and I had to pay 15.3% flat. Flat is the difference between a gradual tax, which is what your income is based on, and the self-employment tax, which is a flat tax. So I paid 15.3% in a flat tax, which hurt. I believe it was like $15,000 was just that tax. Then I had to add in my federal and my state, and all in all, I paid $30,000 for 2021 tax bill. Didn't like it. If I had done the planning that I'm about to share with you right now, I could have gotten away with only having to pay maybe $14,000 to $20,000, which that's another Rolex right there, right? That's why I'm wearing a Breitling, because I spent my Rolex money on my taxes. I'm kidding, I did. Now let's get to how you need to structure your business to not pay these tax bills. Here's how you do it. Up until making $50,000 a year, you don't have to worry about anything, okay? Your 15.3% flat is not really a big deal. It's not a word. Don't even worry about it, right? You ain't got no tax concerns, nothing. But as soon, and I mean as soon as you realize, hey, I'm gonna make more than $50,000 this year, you need to make this shift. So here's what you need to do. You need to set up an LLC or a corporation so that way you could be taxed as an S Corp. Now let's go and put a little nugget out there for you. When you ask people, what do you have, an LLC, sometimes they'll say I have an S Corp. S Corp is not an entity. An S Corp is a tax designation. There's a big difference, right? Your entity is your LLC or your corporation. The S Corp is just how do I want to be taxed? What is the method that I want to be applied to me by the IRS? And you, as a small corporation, want to be taxed as a small corporation. Now here's where the benefits come in, okay? As a small corporation, you have to put yourself on payroll and pay yourself a reasonable salary. So I'll give you an example of what I'm doing because I'm very open and honest with my finances. So I didn't do this last year, but this is what we're doing this year. I separated all my expenses between what's a business expense and what's not a business expense. Obviously, I started a corporation, not an LLC, because I figured I'm going to grow this into something else, and I don't want to have to restructure it or get rid of LLC and start a corporation later on when it's more beneficial to have a corporation. Once you make like $1 million plus, it's more beneficial to be taxed as a C corp, right? Anyhow, so here's how I'm doing mine. I divided up my business expenses between what the business pays for and what Aaron pays for, and I found out the only thing Aaron pays for is his mortgage and his utilities for his mortgage and all the stupid money I spend eating out, clothes, all that stuff, right? So then I said, you know what? If I pay myself $1,800 bi-weekly, that is more than enough to sustain that part of my lifestyle. My mom's bills are still paid, my business bills are still paid, all the income is still staying in the business account, but this is what I'm getting paid. This is my reasonable salary. And then whatever's left over, you can do what's called a distribution. Now, when you do distribution, you pay different type of tax on it. You don't pay any self-employment tax. There is no payroll tax you got to worry about. There's none of that. It's basically considered capital gains in a way, right? And you just have to pay whatever like the federal and state taxes are on that level, and whatever income is left over, that's what you pay. Your corporation fees, whatever they're called, I don't know what they're called. But they're significantly less because you don't have a 15.3% flat tax just hitting you. And the additional benefit is there is no double taxation versus a C Corp, there's double taxation. When you take a distribution, the business will pay taxes on that money. There's no way avoiding that. But you as the individual, like me as Aram, I will not have to pay any additional taxes, whether I take that money out today, next year, or 4 years from now, right? The tax has been paid, so I can do whatever I want with it, right? As a person, business pays for it, I don't. When you have a corporation, the business pays for it, and so do you. So I'm paying myself essentially $42,000 a year. That's my reasonable salary. Now check this out. I now have to still pay, because I'm on payroll as a W-2 employee, I'm paying into Social Security and Medicare, right? That's 7.125% of my check goes to that alone, right? And that is, I believe, a flat number. And then the corporation makes up for the other 7.135% to total that 15.3% number. Now you're asking, Aram, I'm still paying 15.3%. What's the benefit of doing all this extra paperwork? Well, let me tell you. Right now, you are paying, for example, me, I'm paying 15.3% on only $42,000, not 92. That is a big difference. In addition, the 7.135 that I pay in, I want to say payroll tax, that is deductible off my business tax return. So essentially, I'm using, because whereas before you can deduct a 15.3% because it's a tax, like you can't deduct taxes. That's not how this works, right? But you can deduct payroll taxes, right? So that is an additional benefit. So you get to lower your taxable income as a corporation as well. Okay? So this is how you need to structure it. Anything after $50,000, you need to set up an LLC or a corporation, give all that paperwork to your brokerage, and have them pay you through that corporation or LLC. And then you put yourself on payroll, which is very easy, guys. If you just get on QuickBooks.com and it's like $80 a month, you can get their payroll package and literally automate the entire process. Now, personally, I suggest you get with the CPA, a good one, okay? And you have them guide you through the process, because I had to set up unemployment insurance with the state of Illinois. There's a couple of ticky stuff that I had to take care of, which was kind of annoying, that would have probably confused me any other time, but my accountant was on the phone with me the whole time. So as a real estate agent, that's what you want to do. Now that you have a corporation, that opens you up to all types of business funding, which was one of the main reasons I wanted to do this right away, because I want to get access to these SBA loans, raise capital for when I need it. I won't be able to raise capital, right? So I'm basically, now that you have a business, you have access to business funding, right? Business loans, business credit cards, and the money in this sector, limitless, right? As much as you want, because it's a business, you can generate more. The second one is, I'm gonna give you an example. I don't know how to, I've given my mom $1,000 a month for the last 3 years. That's $12,000 a year that I cannot write off my taxes because it's not an expense. It's simply like a good deed that I do. Now that I have a corporation, however, I put my mom on payroll. I still give her the $1,000 a month. She's my personal assistant. She does a few things for work here and there. Poof! I've now generated $12,000 in additional deductions off my income. So now you could do this. For example, my girlfriend's gonna be on payroll as well to do some of my paperwork. Boom, that's off the table. Easy. So it's just a lot. You have a lot more options to save money when it comes to taxes when you're a business, or like when you own a corporation or an LLC, versus just being taxed as an independent contractor, all right? It's not the best way to do it. That's why nobody does it. But up until you make 50K, don't worry about it. If around like, let's say around February, you realize, hey, my pipeline is looking real good, and there's a good chance I'm gonna go over 50,000 this year, time to set up the LLC. And it's so easy. Do not pay anybody to set up your LLC. It's so easy to do. All you have to do is go to on your city's like Secretary of State website, or just Google establishing a, and go to the actual like .gov website. It's $150 and literally took me 3 minutes to set up. I paid a guy $800 to set up my first LLC. Complete waste of my time. So that's about the end of this video. I hope this was helpful in how you need to structure your business as a real estate agent to get the most tax savings possible. And if it was, don't forget, like, comment, and subscribe. I'll see you in the next video.